Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. It is Sunday, October 30th, and this is your weekly video. All right, so we're going to dive right into it here. We're looking at the NASDAQ futures. Very interesting week last week. The yellow arrow is the forecast that we presented 2 weeks ago. So that has played out actually really well. What else you're seeing on the chart are a couple of signposts of upcoming important news items here. We've got the FOMC meeting, November 2nd. That's, what is that? That is Wednesday. That's when the news conference is. And then on Friday the 4th, we've got non-farm payrolls or the jobs numbers coming out of the US. So what do we see so far? Okay, so this reaction or correction of what I said 2 weeks ago was going to be some sort of correction of this entire structure from August 16th indeed has played out. We've got a correction back to the 382 of that entire structure. And it tagged the bottom end of our green target box here. Friday, we had a very strong day, and that's confirmed down here by this indicator. This is called the Chaikin money flow. Okay, this is actually a volume-based indicator, and it takes advantage of the it calculates the indicator based on the volume and where price closes relative to the rest of the candle. So that takes into account the flow of volume each day. And you know, I look at it as kind of a more sophisticated on balance volume type indicator. And I look to this for sort of confirmation as to whether these big moves are real or fake. So we definitely got a real move on Friday. There was volume behind it. The Chaikin money flow popped up over the zero line. It made a new high. We haven't seen money flow this high since all the way back here on August 25th. Okay, so the other thing I'm looking towards is this FOMC meeting, and many participants hedge these meetings, and then when those hedges come off after the Fed announces that they're going to do what they've said they're going to do all along, i.e. no surprises, then those hedges come off and we see a little pop up. So far, this 2-week-old forecast that we built has played out pretty well. There's a few questions in my mind about how does this end up? How high do we end up going in this green box? And do we end up terminating somewhere in this green box in the next week or so? So to help answer those questions, let's go and take a look at the Time Trades forecast. But as usual, I want to do a quick review of the Time Trades roadmap in our presentation here. So not much new this week other than continuing to switch over to our new data provider. So US stocks are switched over to the new data provider now. I still have Canadian stocks, foreign exchange pairs, and crypto left to do. So we're making good progress there. We've already got access to some new indexes like the Nifty, Bank Nifty. SPX is still to come, but we did add the Australian index there as well. So this remains sort of the major roadmap that we're going to be pursuing over the next few weeks, and we continue to progress that. Okay, so that's the roadmap update. Let's flip over to Time Trades. One of the things that I'm going to do here intentionally is I just kind of want to show off what I think is one of the major values of Time Trades, and that is its ability to help you create a mental model of a likely path of price by quickly scanning multiple stocks. Now, remember that each of these probabilities are calculated based on over 1,700 different data points. So we use machine learning to train a model that fits both price and these 1,700 data points, and these data points are astrology based, they are GAN based, they are astrophysics based. They are things that I can project into the future. And all we're doing is we're using modern machine learning technology to basically create a mapping between price movement and what's happening in these major timing cycles. And that allows us to project these forward. So there's a lot of calculations happening behind the scenes that go into these probabilities. And what this allows you to do is benefit from seeing these probabilities visually and very quickly creating a mental model of where price is likely to go. So I'm going to show that off as we touch on over 20 different symbols in the next 10 minutes or so, starting with the Qs. So here's the QQQ, and what we see is an increasing probability of down days, of 2 standard deviation down days heading into mid to late November. We've got a pivot low here, November 15th, and another one November 22nd. What we see is increasing probability of pivot lows. So even though we had a very strong day Friday, it looks like if your time horizon is 2 to 3 weeks, then you'll want to be on the side of the bears. Let's take a look at spiders. Spiders, very similar. We see increasing probability of pivot lows heading into November 17th. So these are calculated. It's important to understand how these bars are calculated. These are 2 standard deviation moves down calculated over the last 5 days. So we take a look at November 17th and count 5 trading days back from that. 1, 2, 3, 4, 5. And November 10th is sort of where that 2 standard deviation move down starts. Or we can start with this bar, November 11th, 1, 2, 3, 4, 5, and then November 4th is kind of where it starts. So these are probabilities of 2 standard deviation moves down over the last 5 trading days. So if you want to trade for, say, this bar on November 11th, then you'd want to make sure that your position is established around November 4th. Okay. All right, that's spiders. Let's take a look at the Dow. Now on the Dow, again, a very similar shape. We've got a pivot high forecast, November 2nd, November 3rd up here. That's the yellow bars. And then we see also increasing probabilities of moves down into November 16th. And it's very notable the sudden absence of probabilities of moves up here starting November 7th. Okay, so this gap is very noticeable here on the Dow. Okay, let's take a look at IWM. IWM, again, confirming the overall pattern that we see, increasing probabilities of moves down into mid-November. And then after that, we see a little pop up starting late November, early December. Okay. Let's also take a look at some of the Indian indexes here. So we've just added these over the last week or so. This is the Nifty 50. The Nifty also looks fairly bearish. We can see prices moving up here into this reducing down pressure area. Often reductions of down probabilities translate into increases in price. And then we see increases in down probabilities heading into mid-November, just like North American indexes. Let's look at the bank index here on the National Stock Exchange. This one shows something maybe a little different, I guess. We've got some green probabilities here this week heading into Wednesday, Thursday, November 3rd, November 4th. And then we start to see some moves down in mid-November. So maybe a little bit more bullish for the Nifty Bank Index. but we still see that pattern of down moves in mid-November. All right, let's take a look at bonds and currencies here and see what we can see, starting with the US dollar index, or UUP. So the US dollar index declined significantly this week. We see a reduction in that down pressure coming up this week into November 7th, and then that returns here November 14th. So this is a little bit interesting because typically everything is in recent past has been kind of an inverse dollar trade. So if we see the dollar going down into mid-November, then if recent history holds, that would be bullish for stocks. So there's a couple different ways to interpret this. We could see a break of that correlation between the dollar and stocks, or another possibility here is we see this forecast invert here, where the dollar could potentially make a rise, because often what I found is when these forecasts are wrong, and you need to think through that scenario, when these forecasts are wrong, they're often 180 degrees wrong. So there's a potential that this cluster of moves down right around mid-November could turn into a move up, right? And that would actually align with this pivot high we see over here on November 23rd. So there's a few inconsistencies in the dollar forecast that we need to be aware of. But in general, the dollar, the dollar is inversely correlated with stocks. We see dollar going down equating with stocks going up. If that were to break, if that correlation were to break, that would be a significant event. Okay, let's take a look at bonds. Bonds are also very informative here, and we've seen in the 30-year bond some strength. We saw that strength a couple weeks back and mentioned it then. That came to pass, and now we see another cluster of green days here. And if this comes to pass, this would also be bullish for stocks, as that indicates rates, or at least long-term rates, coming down a little bit, right? However, that bullishness does decline heading into mid to late November, and we've got a pivot low here in November 18th to 22nd, which again aligns with our peak down pressure in stocks. So it looks like the long bond is indicating a little bit more up left to go in stocks, followed by a move down. Let's take a look at the short end of the curve here. We're going to go over to IEF. This is the 7 to 10-year Treasury bond. And this showed some strength, but that strength drops off quite a bit this week, and we've got a cluster of low probability moves down. So this would indicate bond weakness or rates going up and heading down into a pivot low in bond prices November 18th, again correlating with what we see in the stock forecast. I also like to look at individual stocks here as well. So let's grab Apple. Apple, November 18th, moved down. So that's confirming the thesis that we're seeing. Microsoft, what do we see here? Again, increasing probabilities of move down November 7th, and a big pivot low November 15th. So I would say that's confirming as well. Microsoft also looks like there's a continuation down move into December. Let's take a look at Google. Google also shows a cluster of these moves down here November 14th into mid-November. So the consistency of the forecast across stocks and indexes is really becoming notable. Let's take a look at some of the banks, and the investment banks, specifically JP Morgan and Goldman Sachs, are very much geared to the stock market. And I checked these out this morning, and very clear forecast, very strong alignment with everything else we're seeing with this big cluster of red in the second half of November. That's JP Morgan. Let's take a look at Goldman Sachs. Somewhat similar. We've got a pivot high here, November 11th. So that's, somewhat different, but we also have moves down and similar to the Dow, a complete evaporation of any potential for moves up here. And we also look at, from a price standpoint on Goldman Sachs, we're up here in supply zone where previous pops up have ended. So everything looks like the coast is clear for a trip down for GS. Okay, so that is a very strong alignment on stocks. So I think based on this, we can go over to the trading view and update our forecast line here. We've got our yellow forecast line that we built 2 weeks ago that has performed very, very well for us. I don't think there's too much change to happen here to this. One of the things we're looking for here is a move down into this green box. I think one of the things I may do here is just update this arrow to target kind of mid-November. So I'm going to shift this back a little bit to, let's say Wednesday the 16th, plus or minus. Obviously, this green box is not going to be touched in, late October. So I think we can slide that over a little bit, and we can refine that. We'll align it up with this Gann wave green here on November 7th. Okay, so now we've got these two news events happening this week. Historically, these news events have, like the most recent examples, have been negative of FOMC announcements and non-farm payrolls. You can see what happened the last time we had non-farm payroll on October 7th. That was very negative. I personally don't like to trade assuming some sort of reaction to a news event. The broader trend is down, and I think we may see a slight continuation up, just simply based on the strength of Friday's move. Very big bar, very strong move, confirmed by volume. That may continue to coast up a little bit, and we may see a little bit of short covering after FOMC. So I'm going to extend this green box up into FOMC day and maybe one day beyond, and that's about it. But, this is not a forecast that you should take with daily precision. This is something that, is forecast, take it plus or minus a day or so. And we're going to shift over the top of this into, let's say, Tuesday, Wednesday. We'll align that with the FOMC day, because I have a feeling that we could see a spike up after the press conference for the FOMC meeting, where a lot of the hedges come off. But none of this changes the broader reality of the structural bear market that we are in and the structural inflation that we are facing. Okay. So that's our updated forecast. Expect to see one last push up into this heavy area of resistance. If you're wondering what these lines are on my chart, the pink one is 382, the gray one is 50%, the green one is 618. These are all the retracement levels from the August 16th high down to the October 13th low. And in addition to that, we've got the orange line here, which is a magic level. So, and then finally, we've got the square of 12, which are these two EMAs. So there is massive overhead resistance here. And looking at how easily it was rejected from just the first level at the 382 and the magic level, I think the most that we can hope for is maybe a trip up to the 0.5 or maybe the next magic level here at 12,232. Okay, so there's our updated forecast, still directionally aligned with what we presented 2 weeks ago. And we're taking advantage of the clarity from time trades in terms of what's likely to happen over the next 2 weeks. No guarantees, of course. There's nothing is guaranteed in this game. We can only play the probabilities. Okay, so that's the new forecast. Let's go and take a look at the energy complex. I've been tweeting about natural gas and a bearish move down in natural gas. So we got a nice bearish move down here into the white magic level at about $18, $17.94. Little bounce off of that for a couple days, and it looks like the bearish move is resumed, and we've got a very nice probability of a move down here on November 2nd, November 3rd, confirmed by a pivot low November 1st, November 2nd. So I'm going to be looking to take profits on my position in the cold ETF early next week. Any sort of move down below this white magic level, and that's a great opportunity to take some profits there. It looks like we're going to have another opportunity to go short starting late November, heading into this big pivot low down here, December 13th. So looks like tons of opportunity in the world of natural gas. Let's take a look at USO or West Texas. So what we're seeing here is some small probability moves up with a pivot low on November 11th. So we could just see some continued chop along here until mid-November. But the dramatic part of the forecast starts really in early December, and we see just a relentless increase in probabilities of 2 standard deviation down moves through early January. So looks like an opportunity to short here starting in late November, or maybe even late November, November 28th or so, to take advantage of this move down. Everything, of course, is dependent on price confirming. So these are just timing probabilities, and you always have to align those with price. Let's take a look at crypto. We've finally got an eventful week in crypto this week. I'll start with Bitcoin, even though Bitcoin was probably one of the sleepier coins this week. Again, we're just sort of grinding below this magic level here at 24K, starting to see some signs of life as we move up. But let's go and take a look at what we see on TradingView here for Bitcoin. I want to share the Chaikin money flow again, and how that works on Bitcoin as well. So we're looking at, let's zoom out a little bit to a daily chart. What you see here is the time trades indicator. We've got the magic levels, which are the orange and white horizontal price lines, and we've got the Gann waves on, which is yellow and blue. So we can see we're in a bit of an inversion here of the Gann waves. Now, by inversion, I mean the usual behavior of Gann waves is yellow is a high, blue is a low. But when yellow marks a low and blue marks a high, we start to see a bit of, well, that's what I call an inversion, right? So all that means is that there's an inversion of the typical behavior of price around Gann waves. Now, do we see anything interesting here with respect to volume and the Chaikin money flow? Not so much, but it is, the interesting part here is it is above zero. So this indicates some actually relatively steady accumulation in Bitcoin. And you know, the fact that it's just trundling along here with the money flow above zero indicates there is some underlying strength here, and we're starting to see that with these moves up. So that is probably better expressed in Ethereum. Ethereum, of course, had a great week this week with a solid move up over the white magic level at 1364. And now we're in a bit of a resistance zone with price trying to get through the square of 12, which is not easy. However, if you see the if you look at the Chaikin money flow, it's in a pretty strong spot here where it's making new highs, indicating that volume backs this move. Volume is increasing as price goes up. This is a real move. This is not a fake move. So there may be an opportunity here to enter, not here because we're right at the top of the Bollinger Band, and we just touched red on the daily, and it looks like we're starting to see some resistance as we try to get through the square of 12. These are these two EMAs. And we can see before how the square of 12 has provided strong resistance. But if we do get a move back down to this white magic level, and remember, most magic level crosses end up getting retested. Okay, so this one has not been retested. So we may get a retest back here. If we get a retest back here with a stronger Chaikin money flow, then that may be the recipe for a big push up. Okay, so that's Ethereum. And then finally, of course, we had DOGE going to the moon this week. So let's see what we can learn from that. Now, this price action was not forecast by time trades, and that's okay. That happens. Time trades is not perfect. Nothing is. But what can we see here from the price action that could have allowed us to jump in on this? All right, so one of the things that I see as we drill down to a 1 hour chart is we see a magic level cross, specifically a white magic level cross. And of course, there was lots of orange ones leading up to this, but the white ones should really get your attention. And when you see a white magic level cross on a big spike up in Chaikin money flow here, this is kind of a big deal. Now, this is significantly above the red Bollinger Band here, so this is not a buy zone, right? You need to let that volatility come off, let price go sideways for a bit, and once it touches the yellow, this is the basis line for that Bollinger Band, and this is calculated using a 20-period Hull moving average. Now, Hull moving averages are faster than regular moving averages, right? So there's much less lag in them. That's why I like to use them. They react quite quickly to moves, and so this boost up here over a magic level, way over the top Bollinger Band, and then it digests and goes forward. This is a great spot to buy right here because we can see the pullback to an orange magic level. Chaikin money flow stabilizes here, and then we're touching the yellow HMA. So this is a classic bull flag, and then of course we get a pump all the way up to the next white magic level. So lots to learn just from price action in Doge. So super interesting there. All right, so with that, we will wrap things up for today's presentation. Thanks for listening. Appreciate you guys. Good luck trading this week. Trade safe, and we'll talk to you again next week. Bye now.